Let's talk fundamentals then. Dinesh Thakur, CMD at Angel Broking, joins in on the show. Dinesh, hi, morning. Firstly, markets have been witnessing decent FI selling pressure post the budget. What is your sense of the situation, and especially in the light of what the GAR norms have actually thrown up?
I think budget was not neutral. It was definitely negative in the sense that FIs are worried in terms of retrospective tax clause, and fears are that maybe there can be a tax on amount or investment that is coming from tax-free havens. So there is a concern which needs to be addressed. But if you look at the market, ultimately we look at valuations, fundamentals of the country, and fundamentals will decide the future course of the market. In that sense, I think negatives of the budget has been enough factored in our prices right now. So there can be like sentimental impact on prices from here on. But if you look at valuations, I think market is almost like at a level where anytime it can bounce back. Maybe further say 5-6% down from here, and we are done with all negative news in the budget.
Dinesh, morning. Neeraj here. There is a bounce back today. You think this would continue? You think despite all the problems like GAR, etc., the outlook on India remains positive?
Yeah, definitely, because if you look at, say, money which comes through P-Note is almost 25% of FI's money that we get in a year comes through P-Note. If there's a concern on P-Note, there would be some kind of an outflow due to P-Note. But ultimately, what will decide the market trend, I think, would be fundamentals and the future market outlook. Outlook appears to be better after 2 quarters. So I think it is a matter of time that this fund flow, outflow will stop, and we will see a decent kind of an inflow in our country. In that sense, I feel that looking at, say, outflow that we are witnessing, it is temporary phase. I don't think it's going to last. But there are lots of long-term investors who are interested in a country like India, and looking at the juncture that we are, where actually macroeconomic factors are turning favorable, are supposed to get favorable in few quarters. I think long-term investor would like to invest in country. I don't think there's a big concern in terms of liquidity in a country like India.
Dinesh, we also had some reports, indicating that the coal mining as well as CAG and coalition problems in the centre as well post the rail budget. Political and domestic reasons as well are also leading to some sort of panic in the market. What is your sense of where all of this could actually lead the markets to?
Definitely, when there's a negative news, negative sentiment across the market, even small negative news is going to impact and would be emphasized to a great extent. In that sense, I think we have lived in an era of coalition government since many years. Since decades, we have got used to coalition government. That is not going to impact our country's fundamental in a big way. Knee-jerk reaction will be there to news. And when we talk about, say, like issues like coal mine and all that, I think this kind of things will come and go. It's not going to impact market in a big way, unless and until we see any kind of a decision which is going to impact our country's growth or corporate earning growth. I do not think that factors which have already been affected in price are going to have a double impact on prices. Already we have discounted political scenario after UP results. I am not very worried about this coalition factor now. Already it is in price. Now talking about say other broad reforms, I think market has got adjusted to that reform pace would be slow, and with this reform also we would be able to get back to 7% GDP growth. And looking at the 7% GDP growth, I think investors have started discounting our market, which is factoring our price.
Dinesh, credit rating agencies, let's talk about some specifics, because these agencies have been downgrading rating for many Indian banks since the last 1 to 2 quarters, depending on compressing margin, asset quality. I mean, we've seen Moody's done that across the public sector space. Do you think the banking sector will continue to underperform in the short term, or could there be some value buying emerging in large PSU or some quality private sector banks?
No, I think they make a sufficient provision for NPA. I don't think there is a major issue in terms of NPA rising from here. We have seen when economy cycle really is on a downward cycle, side, NPA tends to increase. But I think we have seen worst of economic growth. which we saw last quarter to the tune of around 6.3. Going forward, I feel that we'll see a better growth, which will help banks in terms of improving their NPA ratios. I don't think it's a big concern, and one should be really worried about banking sector. Going forward, I feel that banking is going to benefit because of say interest rate cycle coming down, inflation coming under control, and the government's initiative to really infuse fresh funds in PSU. So I think in that sense, we continue to like banking stock, but particularly we like private sector bank, and I would say that our preference would be tilted towards private sector bank, as they have a better control on NPAs, and they are able to better manage their growth, and they are able to like get a better market share compared to PSU.
Dinesh, so will you still continue to hold or consider adding Axis Bank and other private banks in your current portfolio at the current levels?
No, we continue to be holding Axis Bank, and we would like to add this to our portfolio. Like, we would like to recommend our investor to add if they have missed the opportunity previously. Apart from that, we like ICICI Bank, and I would say that one has to distribute his portfolio in such a way that he has enough allocation towards banking sector, because banking has an weightage of around 25-26% on indices. So one, if he wants to really get a good appreciation from his portfolio, needs to be overweight on bank. Apart from that, we like rate sensitive sectors. I think one has to be a bit overweight on rate sensitive sector, looking at future outlook of interest in our country, and one may be a bit underweight on defensive sectors.
Just before we wrap up, Dinesh, a broad macro question. I mean, with the rupee doing what it is doing and sliding further downwards and crude gaining strength, you think this combination could put a bit of a cap on the upside, if any, which would come about post the earnings season, assuming that everything works out well there as well?
Yes, this rupee and this oil is definitely going to impact market performance. If you look at our current account deficit, it is really high, and I don't think it is comfortable. So it is very much important that our currency depreciates so that we are able to export more and we are able to bridge this gap. So in that sense, that's the reason I told that 2 quarters, it may take 2 quarters more for really RBI to think about lowering this interest rate, because rupee depreciation and oil is going to have an impact on inflation. Until the time we don't see inflation really coming down, I don't think that RBI would be comfortable in terms of getting this interest rate down. But in terms of other liquidity factor, I don't think that's a concern. Till the time we are able to manage inflation at a reasonable level, I think we have enough leverage to really take care of liquidity. So I would say main important point would be having an eye on inflation, and that is a more crucial factor. And all these 2 factors what you mentioned about rising oil and currency depreciation, plus this additional tax that government is going to collect, 40,000 crore additional tax, is going to have impact on inflation. So we have to see that when this impact gets fully absorbed and RBI takes a comfort on inflation number and starts looking favorably on interest rate and thinks about growth. That is more important than any other factor. I think market has already discounted these factors like rupee depreciation and oil price going up. But to what extent, I think it may take 1 quarter for us to absorb all this negative news.
Okay, Dinesh, appreciate you taking the time out and joining us and sharing with us your thoughts on the market.